Hello, dear traders. Welcome. Hello. Can everyone hear me? I wonder. So, if you can hear me, if you can see my screen, guys, so please let me know in the comment section. My name is Thomas. I'm a trader and an analyst with OLYMP TRADE, and today I will be doing this trading session for you. So, guys, if you can hear me well, please write something in the chat. Or if you have questions or like any sort of questions, issues, anything, I will be very happy to answer you. Our today's topic is going to be market overview, so the upcoming week, and we are going to see what's going on the markets and what you should pay attention to later this week. All right. So, okay, a few questions here in the chat already. Mustafa, hello. Good to see your comments as well. When it will start? Yes, we have started. Have been experiencing unnecessary losses. Hope this will change from today and glad to be here. My first time, says John. Well, John, welcome. And a piece of advice number one from me would be to really work on your trading journal, trading diary, and set realistic goals for yourself. Like, don't try to become a millionaire or billionaire in your first weeks of trading, but instead learn how not to lose money while trading. Because once you figure out that part of the puzzle, how not to lose money, eventually you will start making money. So if you learn how to manage your losses, how to cut them early, and how to not let them grow dramatic in your account, then eventually you're going to become a profitable trader. That's the simple thing. So guys, how do I start my trading week? Well, first of all, I start my trading week with a wonderful tool which is called investing.com. Right, so there is this wonderful website, and in this wonderful website, we can get some updates on what's going on this week. And probably, as you know, we have what are the main news of this week, right? So first of all, yesterday, for all the football fans out there, we have World Cup 2022, which started this week, which started well, basically yesterday, with the match between Qatar and Ecuador. So the hosting team played the first match, and today we have, I think, like 2 or 3. So England versus Iran and a few other teams. Like, I'm not a huge fan of football, but I do like to watch World Cups because it's kind of like a very interesting level, because all the top players from each country, they join this tournament. And as far as I understand, it's going to be Cristiano Ronaldo's last tournament, probably, because he's now 37, and he said that he would retire by the age of 40. So maybe he will take part in the next Euro Cup in 2 years' time, in 2024. But as of now, it seems that this is his last or one before last tournament. So that's, of course, interesting to watch. And yeah, this week we don't really have many updates, many economic releases this week before Wednesday. And then on Wednesday we have this huge, tremendously packed number of different releases. We have on Friday, the 25th of November, we have Thanksgiving Day in the United States. Thus, there will be a little bit less volatility on the markets. But of course, we have local indices and other composite indices that are going to be very volatile. So Thursday, more or less a quiet day before the day off. Something interesting which will come out on Friday is German GDP. So German GDP is this like very important economic factor now, because it will show whether the European economy, how it's doing, right? So we need to see some growth, and if we don't see growth, then the exchange rate of the euro will go down compared to the United States dollar. So that's an important thing to watch for on Friday. And then on Wednesday, like I said, yes, we have a lot of publications from, well, first of all, it starts in New Zealand. So that will affect the New Zealand dollar and other currencies which are in correlation to it. Then the pound, then the United States, the US dollar, and we have one at 4 p.m. GMT plus 3. Then we have 4:30 release. We have 6 p.m. release, 6:30 crude oil inventories, and we have FOMC meeting minutes. So a lot is coming on Wednesday. So Wednesday is this huge day. Basically, Monday, Tuesday are like days off. Thursday and Friday are also very, very quiet days compared to normal days on the market. And Wednesday is going to be this huge day. So guys, let's move on to some interesting things. So what about my trades, right? Last week I opened a few trades. So finally my forecast on, okay, so let me just remove this, the Friday strategy, right? So I talked briefly about this position on Thursday, I think, during my webinar on Thursday. And I was pointing at this breakout candlestick. So basically we had this narrow range. So I called it also like this a fortress. So this is called a fortress formation. So we saw this breakout, and basically, yeah, there were plenty of opportunities to re-enter that position. So this is the Japanese yen. We can also apply some Fibonacci levels to it. Oh, where we are right now. Okay. So once again, Fibonacci levels. And we need now to connect these. So I would say like this one with the lowest segment here, and probably my my exit point of this trade would be somewhere around here, around 142. So I'm still holding on this, holding this position, and yeah, 142. I'm prepared to close it. All right. Now, about my position on the Euro USD. So that is also an interesting trade, kind of like reversal pattern to the previous chart that we saw. So yes, there was this breakdown. My stop loss nearly got triggered, but luckily it didn't get triggered, and because there was this pullback, and now eventually I'm making this plus 98% profits from this position. And of course, my take profit is conveniently located right in front of the right in front of a very serious level of support, because this level is going to be, so 1.01 level is going to be a very, very strong level of support. So yeah, that's the story. Okay, question about gold. All right, let's have a quick look at gold. Let's see what's going on. So also this ticker for gold is also XAU USD, so XAU USD. Basically, it's called like aurum for chemistry. Like silver is called argentum, so it's XAG, so X argentum against the US dollar, and gold is XAU USD, so you can also type it like that. Now, what's going on in gold? Yes, so we saw this, well, basically this was a huge, tremendous level of support here, and those of you who were lucky enough to enter these positions here probably made a lot of profits, basically from here and all the way up to here, up to this price. So now, of course, obviously we are making a pullback, and we should use the help of our good old friend Fibonacci. So we can add the Fibonacci levels. like this. And where is our nearest support? So yes, our nearest support is conveniently located. Once again, it coincides with this level of support. So the previous level of resistance now, which now turns into a level of support. So 1725. So that is the nearest level of support. So if the price drops here, I suggest opening buy positions. So that's probably it. So yeah, that's it. And then you can hopefully make a reversal trade like that. Okay, what is next? So yeah, we talked about the economic calendar. Okay, now let's talk a little bit more about our main instruments of focus, which are the euro against the US dollar. And interesting enough, I would say that we are still in this long-term downtrend on the euro. Of course, the level of 1.05, which is a psychological and a round number as well, it acted as a very strong level of resistance, and the price couldn't just get above that level. So we can put a horizontal line here. All right, somewhere here. And another level is here. So the parity level. So, and to make the picture complete, we should add the Fibonacci levels. And we should add it like this one, kind of connecting this point with the highest point. And we can see that, yes, so the 0.618 level, the strongest one, is conveniently located once again at it coincides with the previous level of support or resistance, depending on how you look at it. Now it's a level of support and 1.02. So that's probably the where I should be closing my down trade, my current short sell position. And yeah, and where you can also open a trade for a reversal. So the trade for an up trade like this. So yeah. Well, by the way, I would like to ask you how many of you open trades on Forex on a regular basis? So I'm quite interested on that. Would be very interesting to hear your opinions. Okay. So yeah, and once again, going back to gold, to the gold chart. Yes, I already explained that, yes, we have this level of resistance here placed at 1785, and we also have a level of support at 1725. So right now, I don't really recommend opening any trades kind of like within this range, because this way your stop loss becomes and like the biggest one when you start trading inside the corridor. So I suggest opening trades only when the price drops to the lower border or the price goes all the way up to the kind of like the higher border of this channel. So that's my recommendation here. Okay, a comment here. I do open a forex trade. I opened but mostly on loss. Had margin call several times. So an interesting idea maybe to take from this webinar with you would be to analyze your trades, your previous forex trades, and to see how many times you were actually opening trades like in the middle of a range. Because okay, maybe if it's a trade kind of like in the beginning. So like I said, I personally like opening trades when the new trend emerges, because now if it is like the middle of the trade in the middle of the corridor, I don't have any support. I don't have any confirmation level. So these levels of support and resistance, I call them confirmation levels. And without them, it's, well, in my opinion, it's just very, very difficult, and that leads to unnecessary losses. Okay. So, and also don't forget about your risk reward ratio. Like I try to maintain this one stop loss. So one take profit equals 4 stop losses. So that with one profitable trade, I can cover the losses of the previous 4 negative trades in case I have. So with this way, you only need, with the system, if you manage to maintain this ratio accurately and consistently, then you will only be needing, well, at least 25% profitable trades out of, well, 100%. And with that, you will still make money on Forex. So the break-even point with this system is like 20% profitable trades. And I guess 1 out of 5 trades, provided that you can really sit in the position for the long time before it closes with a profit. So that's pretty much it. So if you are able to do that, if you are disciplined enough, then you will be well on your way to profits. All right. So what else? What other positions can we look at? So another interesting pattern here is another interesting story that is unfolding right now is the pound. So we can draw a trend line on Forex here. So we have this it works like this. Yes, so we are currently trading at 4-hour time frame. So guys, today I mostly look at what's going on from the Forex perspective, right? So the Forex perspective, and we are about to see this this breakdown. Okay, so we have this level of support. And we are about to break under. So if the price breaks under and makes a pullback, so that would be probably the best entry point. As of now, probably I would still maybe open a trade for an up trade because we are trading at this support level. I personally am a little bit confused here because we are like in this channel in the corridor, and I think the price should drop. That's my personal view on the economy of the United Kingdom compared to the economy of the United States. And it seems that there should be a breakdown. But before it actually happened, well, we can open trades for an uptrade. So let me go ahead and do that. So because the signal is there, and since I also use levels of support and resistance in my trades, I would like to open a trade, like this one. So the multiplier should be 100, and voila, here is my trade, an up trade, the pound, and we are trading right at this level of support. All right. Okay, what else is interesting this week? So oil. Okay, so here comes oil. Now Brent last week was attempting to storm the $100 mark, and the highest it went was something like $99 per barrel, and then it just couldn't, and we saw this huge drop last week. So the oil prices went down by more than 12 or more than even 13% last week, which is a pretty big drop. And now the question is whether they continue dropping or have we found some solid ground and some support. Because as of now, basically we are equally close to a level of support here and a level of resistance here, so which is 90. Okay, so and there are not so many news from the oil market. Seems that the price already includes everything that could possibly happen in the price, and since it's happening like that, I'm not really expecting any like further strong moves here. But at the same time, I think we should have a pullback here, right? So the price dropped, and now there should be a time for a pullback here, and I'm expecting this to happen. Okay, so I can open a trade with a minimal multiplier also for an up trade, just because if we have a look at the RSI indicator, it's definitely going to show us this that we are so much oversold here, and now we have returned above the 30 line, and that is a clear signal for an uptrade. So once again, a relatively short stop loss, but my potential profit is also pretty big, so plus 200%, which can go all the way here or maybe even here, and this way I will be able to have some nice profit. So that's my view on the oil market, and we will see that later this week. So another interesting chart which I would like to show you today is this one. So this website where we can see US crude oil in the strategic petroleum reserve stocks. So basically this chart shows us what's happening with the strategic petroleum reserve of the United States. Now, this petroleum reserve, the stocks depleted by more than, well, okay, so change from last year, now it's 35.6%. And here we can see the daily statistics from this, and we can see that now it was pretty big. These reserves were used pretty heavily in during summer months, with the intention to stabilize oil prices. And now, since October, there was a decline, but this decline was very, very slow, relatively slow to the previous ones. It's only 4 million barrels per week compared to the previous 5, sometimes 7, sometimes even like 6 and more. But this situation, which helped cap oil prices from growing to $120, $140 per barrel, now the situation starts acting in favor of supporting oil prices, because eventually at some point of time the US government are gonna have to start replenishing these strategic petroleum reserve, because for a country like the United States, you cannot really let this situation happen where you will be left with no strategic petroleum reserves whatsoever. Or I mean, like, you don't want them to drop down to 200 from 600. So 600 was this their kind of like average stocks reserve for the last 20 years or 30 years, and now it dropped to less than 400, which is still, it's not the end of the world for the first economy of the world, but at the same time, it's not really a safe and pleasant situation to be in, to find yourself in. So eventually you want to start replenishing the reserves, but at the same time, you don't really want to do it very quickly, very rapidly, because that is going to lead to the increase of oil prices. Because if you start purchasing too much oil from the market, so then your oil prices will go up, will soar, and that is because of the such a speculative nature of the more than of the current trading, because now it's not really like the exchange rates of currencies, or especially like oil prices. They are not really defined by today's consumption, but they are defined by the perception of what's going to happen in the future. Because now if traders perceive that oil prices and will go up and there will be less and less supply of oil, well, eventually the prices will go up. So that's how markets work. So yes, this strategic reserve is this. Now, what is interesting is, of course, and that illustrates what's going on the market as well, is natural gas prices in the United States. And so this natural gas price in Henry Hub in the United States, and we can have we can see kind of like the general picture. And the general picture is this: that for the past 5-6 years, the prices were trading at somewhere around so the average price was 3. Now we are trading at 6.8, which is twice as high, and that is why we are having this current current energy crisis, especially in the European countries, where everything, the cost of energy has skyrocketed. It multiplied by it quadrupled. It went up by 10 times, like tenfold in some countries, and that is one of the main reasons is that natural gas supplies from many natural gas producing countries have been disrupted, and that is why these prices are so high. So less supply with the demand, which is still pretty high. So then, yes, you have a situation like this. What's the name of the website? I think it's called, this one is whitecharts.com. So they have a bunch of different analytical tools and analytics data. So that is quite interesting as well. Now, as we can see, natural gas prices, I think, so once again, we are in the situation of another range. So once again, we have this one. So yeah, like I said, between 5 and 10, we are right, almost in the middle. I don't know where the prices will go next. We don't really have this instrument available for forex trading on our platform. So in this situation, I suggest just basically sit and wait and sit and watch what's going to happen next. Like, it's not really that big of an interest, this asset. So guys, I don't really want to make this webinar long and boring. I want to make it a little bit concise and interesting. So I would like to thank you all for your attention, and I would like to announce that tomorrow we are going to have a trading webinar, and on Thursday another trading webinar where we will discuss some trading strategies, and I will trade live. So me or my friends from our company will trade for you, so you can learn something from that. What else do I want to mention? We also have webinars on our OLYMP TRADE India channel, which are conducted in Hindi. So for those of you who are interested in that, you can also attend, you can also watch those webinars. Other than that, that's it for today. I hope you got some trading ideas that you can try and put into practice. Like I said, I don't want to give you too many trading ideas because I don't want to overwhelm you with information, but have a look at these trading ideas, and like, it doesn't mean that you need to have many trading ideas in order to make money, like trading forex or trading on our platform. Just sometimes you have to limit yourself, put a certain limit. What is it? Okay, and I will answer this question about lots on OLYMP TRADE. So in fact, you sometimes need to limit yourself to just maybe 2-3 trading ideas per day on forex, and that's it. Of course, you don't need on FTT mode of trading. That's a little different. That's where you need to be opening many trades in order to get experience. But when it comes to forex, 2-3 trades per day is enough. Please, can you do a webinar using high Kanashi candlesticks? Yes. So we do high Kanashi candlesticks. That is our millennium strategy. We did it last week, I think, and we will definitely do it sometime in the future. So you can also remind me tomorrow maybe. So when to close trades? Okay, so that is the most difficult question, and no one can really tell you like the best strategy, because sometimes it just basically goes up, doesn't really trigger your take profit, and then it starts dropping. So one of possible suggestion is to enable trading loss. So for example, you go to settings, I think it's this one, and where is my trailing stop loss? Where is it? Where is it? Where did it go? Okay, it's somewhere here. Why does that show? Okay, okay, maybe I'll show it next time. Well, anyways, hold on. So I don't really use it that much. I don't really use that much of a trailing stop loss. Okay, here it is, right. So trailing stop loss enables you to automatically track the price and follow the price. And if the price starts dropping, then you won't lose all your trade, but you will lose a fraction from your profit. So that is a very interesting way to actually not let your like profits completely vanish from your account. Okay, that's maybe another difficult topic. So I would say some of the best trading strategies for exiting your forex trades would really be to wait until this ratio. So one take profit should equal 3 or 4 or maybe even 5 stop losses. So that enables the maximum profitability. And that basically lets you, gives you flexibility in terms of trading, that sometimes you win, sometimes you lose, but in the end of the day, you have some profits. And what is the concept of lots on OLYMP TRADE? So we don't really have this concept with our forex. We only have the amount. So basically, the amount, you just invest $1,000 and you cannot lose more than $1,000. That's how our mechanic with forex works. So these lots are basically in there, but they are calculated automatically, and you don't really see them. In fact, you only see the amount, which is way more convenient in my opinion, because you don't really have to like occupy yourself with like things like, so how many lots do I open now, one lot or mini lot or a micro lot. Instead, you just see the amount and you know how much money you will make if the price doubles or if the price triples. So use the multiplier. So it's just more convenient for the maths, to do maths with us. Well, guys, guess that is it. I would like to thank you all for your attention, and I will see you next week, and probably I will see you, some of you, during my trading webinars this week as well. So guys, thank you very much for your attention, and I will see you soon. Thomas signing out. Have a wonderful day, and I wish you all big profits. Thank you. Bye-bye.